Are you blowing accounts? Are you losing all your money? It's not bad luck. It's not the market. It's this risk to reward. Settle down, settle down, settle down, settle down. What is good with y'all boys? Now, alright, let's be real for a second. If you're blowing accounts, it's not because you're dumb, bro. It's because you don't respect risk. So, you may be asking, well, Risky, what is risk to reward? I got you. Risk to reward is simple. How much are you willing to lose to make? How much? Let's say if I risk $100 to make $300, I only need to be right a few times to grow. Easy. So, you don't need to win more. You need to win. So, let me give y'all the simplest and more detailed way I could explain it. Let's say this. If you risk $100 to make $100, that's a 1-to-1. Now, to be profitable in the long term with 1-to-1, you need to win more than 50% of your trades. I know, what the hell? But if you risk $100 and you make $300, you can win less than half your trades and still be profitable. That's mathematically correct. You could even search it up. Go ahead, search it up. But let me give you an example. Let's say I take 6 trades. I lose 4 trades, but each loss is $100. So that's minus 400. But guess what? I win 2 trades at $300 each. That's plus $600. Overall, I'm still up $200. I lost more trades than I won, but winners were larger than my losers. That's the key principle why most traders lose, and which this is a very dumb one. So, risk to reward only works if your stop loss and take profit are respected. If you move your stop loss further when the price gets close, you're increasing your risk. But if you take profit early because you're scared, you're reducing your reward. And once you change either side of the ratio, the math no longer works in your favor. That's technically solid. What's a good risk to reward? Alright, there's honestly no perfect number, but many traders aim for at least 1 to 2. That means you're risking 1 to make 2. Write that down in your notes, people. So, in strong, clean setups, 1 to 3 is higher, and it is possible. But the key isn't forcing high ratios, because then you're gonna fuck up. Anyways, it's making sure your target makes sense based on structure, which that keeps it aligned with real trading, bro. Real trading. All right, I'm going to help y'all change your mindset. So, before I enter a trade, I don't ask if it's going to win. No, I don't do that. I ask if the reward justifies the risk. If the potential gain doesn't clearly outweigh the loss, I skip it. And guess what? That's discipline. That's one thing you gotta know, and you gotta learn, and you gotta master discipline. And that really is long-term thinking. So, stop asking, will this win? But what you guys need to start asking, is this worth the risk? Alright, you guys. Let me tell y'all something. To whoever's watching this, trading is not about being right. It's about surviving long enough to grow. You can have the best strategy in the world, but if your losses are bigger than your wins, you will lose every single time. Risk to reward is discipline. It forces you to think long term. It forces you to accept small losses, which that's pretty uncomfortable if you think about it. But growth is uncomfortable. If you're blowing accounts, it's not because the market's against you. It's because you're not protecting yourself. And nobody, I mean nobody is coming to save your accounts. You either control your risk or emotions will. You don't need to win every trade. You need to win bigger than you lose. That's it. That's the game. So master that and everything changes.